Hi, folks. It's Adrian CryptoBurb speaking. Welcome to today's Friday webinar. Stocks are actually pulling up strongly and breaking out of their critical resistance. They are pushing higher into the summer that is typically slower, which is pretty interesting. We're going to see how Bitcoin is actually correlating there, and so many other things that we are about to kick off throughout this show. If you're ready to hear this and more, make sure to stay tuned. We are going there right in a second. Hi, folks. Again, it's Ada on CryptoBurb speaking. Looking at my Twitter right now. For some reason, it says that the broadcast is not live or is not allowed. That is pretty interesting. Otherwise, on my personal private Twitter, it's showing that it's actually there, which is pretty interesting. Let me know, guys, if you can hear me, if you can see me well, if everything is going all right on your side, how you are dealing today, dealing and doing. That's that's the question. Those are the questions that I want to ask you guys. I'm really curious, where are you writing from? How is the weather on your end, where you are? This is pretty incredible time in Portugal. It is basically 23, 24, 25 degrees. Little ocean breeze is pretty magnificent. So I love getting back in there all the time. Let me know, guys, how you are feeling about, well, the market today, how you're feeling overall, how's your mood, how's your attitude. That is something that, believe it or not, impacts and influences the way we see reality, the way we perceive things, also including the markets, right? I'm just checking on the mic, checking on my beautiful hairline, of course, right? So this is all looking good, and the markets are looking good. The markets are really looking good. However, we do kick off with the very first question, or the question mark that appeared from the regulators, right? We're talking about the SEC, the Wall Street Journal, actually, and I quote, headline this as it: SEC says spot Bitcoin ETF filings are inadequate, right? Then we subhead follow. Regulator tells Nasdaq CBOE that recent filings from BlackRock, Fidelity, and others aren't clear and comprehensive. So, how are you feeling about that? This is pretty interesting. Um, Drop some comments, drop your thoughts, what you guys are thinking. This definitely brought some volatility into the markets, and arguably probably doesn't change much on the overall trajectory. The kind of like a news that just comes up is rather short-lived most of the time, right? It doesn't necessarily bear any, I should say, major consequence, long-term impact. It rarely ever happens that markets reverse or just turn around very significantly just following a single news, right? The news wouldn't have, unless it's complete kind of like bollocks, complete craziness going on. It wouldn't typically bear as much credibility, as much resonance, basically, with everybody around. So yeah, I'm really curious there about as many people right now as we would expect, freshly into the early stage of the bull market. And I remember, 2 years ago, at the actual peaks, the bull market in November 2021, we were looking at 150,000 views on YouTube. Right now, it's a little bit down, about 90%, 80%, however, your watching that is actually well deserved and well appreciated, right? Also, congratulations to you guys, because you are the predecessors, you are the literal um, pioneers right now of this bull market, right? And I recently visited Dave Keller, CMT, to talk about the credentials and the factual technical analysis covering the bull market, because we are not in the bear market. Let me rephrase that. Let me phrase that again. Let me highlight it. We are not in a bear market anymore. And anyone who says differently is probably negating the reality, right? Because it is not so much my opinion. I do not trade on my opinions anymore. I do not care about my opinions anymore. My opinions can vary on mood, on attitude, the way I feel, and they are completely irrelevant. Most of the time, they are wrong on top of that, right? So why would you ever take and trade on opinions? Not to even mention, our own opinions, right? Beside anybody else's. So we focus on the facts, and there is a whole thread that I put out up there about the factual recognition of the bull market, right? That is the actual pinned thread on my Twitter account. Um, so Bitcoin bull run is accelerating, and that is also pretty interesting, except for some, again, let me dive in a little bit. Except for some risk disclaimers, over here, we are of course talking that the future is uncertain. It's impossible to avoid losses, so do not even try to attempt and avoid losses. It's impossible. It's part of the game. You cannot constantly win for the rest of your life, because Russia-Ukraine war comes up, COVID comes up, and there's not a single person who could consistently, time after time after time after time, predict what is going to happen, because the chances for that are infinitely low. Infinitely. So yeah, focusing on the facts. Opinions change, facts are objective truths. And summer is typically slower. This is a chart by my good friend Almanac Trader. Is he's handled Jeffrey Hirsch. Jeffrey Hirsch is continuing his father's legacy over seasonal studies. Incredible person, great guy. And I also love what he's doing up there. And Nasdaq pre-election years, come up with something that we call as the best 8 months strategy, with the worst 4 months on the other side. That typically makes it kind of like a short summer period be slow, right? Those are the months that you typically do not really want to be in, overexposed to the risk on assets most of the time, right? However, what's relevant is that, well, we are in the most bullish chance, kind of like that you could ask for. 98%, 98.8% of chances over 84 years, right? This is big statistics right there. 84 years. That's 3 times as long as I live, or something. 98.8% of chances. 83 out of 84 odds that we close 2023 bullish. This is a pre-election years. Politicians want to get re-elected again. They need to pump the market. Otherwise, not a single person is going to re-elect them. So it is a political game. This is the presidential cycles. Welcome to the presidential cycles. So why care about seasonal studies? Well, when certain patterns appear, such as hot summers or bullish pre-election years, and they appear consistently over decades, not days, not seconds, not hours. This is irrelevant. This is noise. This is marginal. If we are talking about decades of consistent, continuous patterns, such as not freezing during the summer, then, well, is it wise to ignore that? If you had 98.8% of chances, show me better statistics than that. You have less than 2% of chances betting bearish on this year. Maybe you're right, but you have less than 2%, less than 2 times out of 100, you're going to be right about that. So it's a little bit similar, like trying to wear a winter jacket basically in the summer, in the desert, and expecting that you would actually experience cold, right? It's exactly the same way. Like if you have very strong chances for the bullish year to reappear again, like it had for the past 84 years since the World War II, then why would you expect differently, right? Better to force in those 98%, over 98% chances, and run with it, right? So Bitcoin hits a new 52-week high. This is a Bitcoin bull market. We are gaining on momentum. Gaining 52-week high means yearly record, right? 52-week high. This is big thing. It happens typically once every 52 weeks. Guess what, right? So it's something spectacular. 25K was defended. Before we dive in deeper into Bitcoin analysis, of course, we need to understand that there is a correlation. Bitcoin is a free float, just like any other free float markets. They happen to correlate to each other and with each other more or less strongly at certain occasions. Bitcoin is kind of like, again, ranging a little bit, from 25 around this 24,800 lows, pre-break load, all the way to 31,400 with the new highs. Again, new highs are up there. 200-day moving average, C. Before we dive in deeper, right? This is the line representing a bull market or a bear market. In bear market, it is a trend that keeps declining. In a bull market, it keeps inclining. So if the market inclines, 600 billion asset inclines on average, this is 200-day average, on the 200 days of averaged prices continuously for several months, can it be an accident? Of course not. Of course it cannot. 600 billion asset cannot move accidentally in the same direction for several months. This is called a trend. This is not an accident. This is not due to chance. It's a trend. It's a primary trend. It's a bull market. That's what we call that. So again, this is not my opinion. I'm just stating and commenting on a fact that this line representing a trend, this is a trend of Bitcoin, that it rises. And rising trend of Bitcoin is a bull market. That's not my opinion. That's fact. Anchoring bias will make us, again, try to anchor ourselves and kind of like memorize the numbers around the round numbers and around the averages. So you would often use those averages up there. The volume was confirmed by volume, breadth, volatility, price, percentage travel, price action, time spent. We're spending 10 days above the breakout. This is not a coincidence, right? If it happens for the price to break out and hide back below the resistance on the same day, that might be due to the chance, due to the noise and accident. But if the price remains high for the 10 days period, it's impossible that it's due to the chance. Momentum is high, the support resistance levels and polarities work intact. Bitcoin actually is has triggered my position, right? So I'm still in a profitable position over my 550,000, I think, worth or more position right now, 460,000, something like that. Open for 490 on the 25,600, 26,500 up there. All the tweets were given up, right? So there is nothing crazy about that. It's all trackable. You can go and trace it. This is my trade app there. Not going to read too much about that. You can check it under my pinned tweet. And sentiment improves, the greed improves, the market scanners are looking much better. Altcoins are not the best place to be in. July expectations are slightly positive. Positive expectations, no fireworks, one step closer to weak August and the most negative month, September. So think about it as a little bit of a peak of a slide maybe that you're about to take. Compare with Q4 performance, right? So why throttle against the negative odds of overall August and September combined? If you have Q4, that gives you 50% average return, which means that on average, out of the past 13 years, if you invest in Q3, if you buy end Q3, sell end of buy end of Q3, beginning of Q4, and sell end of Q4, you're 50% on average on Bitcoin, right? After typical September low, October kicks off powerful rallies, 20% average. So this is the time to be in, right? So takeaways of the thread are B, that facts of the opinion, facts are always better than the opinions. Trend is your friend. 2023 gives a bullish context. 25K gave a support held. New 52-week highs, momentum gaining. Long-term trends are up and accelerating. July slightly positive. August, not September, rather negative. Q4 is 50% up return and preference of Bitcoin over altcoins, right? And we also have, by the way, before I forget, we also have a bonus up here so that every person who signs up for our free profitable calls, you're going to be able to get it with the link that is actually shown at the bottom of the screen right now. That's at thebourbonist.com/Bybit. This is official partnership that we have with our partners at Bybit. And they get you not only free access to our profitable calls for free, that is worth $1,500 a year. You can get those free. You're also getting a position size calculator. There is a tool that automatically calculates your position based on the margin, based on leverage, the risk you want to take. And this is your personal trading buddy that is literally telling you and saving you so much time. It's awesome. I use it every single day. And that's a thread summarized. So long story short, again, we are in the conditions. We are in the conditions where I'd say that Bitcoin bull market is accelerating, right? So how are other markets doing? Let us have a look. Let us have a look. Only DAX in the red, and the red is 0.01% minus, right? So it's 2 points. It's 228 points. It's ridiculously close to nothing, except for DAX. Anything else is in the green for the major markets. Dow Jones Industrials 0.81 upwards, right? On Nasdaq, a composite is 1.54 upwards. What else? So we are looking at the significant, nice breakout, breakaway, kind of like a gap, I'd say. Pretty interesting. XLY, which is consumer-driven sector, right? Often by durable goods like cars, etc. So this is accelerating. All the averages are actually, strongly accelerating, getting more and more vertical. And if that happens, this is powerful trend, ladies and gentlemen. This is a trend. Trends are your friends. You don't want to oppose a spinning track with your body weight, right? That's the law of velocity and of time and of force, right? That's the second Newtonian law of dynamics, right? Momentum, the mass versus the mass times the velocity in a way, right? That's the momentum impetus in a way, I'd say. So the markets gaining momentum are like speeding tracks. You don't want to oppose them, otherwise they'll run you over with terrible results. Gold is a little bit down, right? 1917 all the way right here, following a little bit of a still bullish market trend. This is out of any question. Bull market trend line is accelerating, maybe not accelerating, but it's just going up steadily. So it's still a bull market, however, followed by medium-term corrections. And I can say that not because I think so or because I claim so, but because the averages are telling you that. The trend, the blue line is a medium-term trend. It is going down. It's declining. Even more strongly decline comes with the 20-day average. So this is a medium-term and a short-term correction that is actually up there. Of course, there are some technicals to back it up, like some actual, again, some levels all the way. Oh, there we go. Like some levels, the breakouts, resistance, like a double top, whatever you name that, doesn't matter too much, right? Because what matters is that the trend is down. However, it is a medium-term correction. It means that it is still a bull market, just suffering the secondary correction all the way up there. Silver is retesting. It's a little bit more, I'd say it's a little bit more pressurized. Isn't even such a word. There's a little bit more downward pressure on silver. The averages are both similar case to gold, right? However, it's showing relative weakness when compared to gold. Just look at the distance from the 200-day moving average for gold versus the silver. Silver is right now touching, right? So gold compared to silver is basically, if silver was gold, the gold would be here in the chart and the silver is there right there, right? So touching the 200-day moving average while it inclined. So the silver is in a bull market. I still do not want to give up on my silver, right? Still do not want to give up on my gold positions from 2021. What is there? Platinum is actually looking far worse than any of those, right? There is a 20-day crossover of a 200-day crossover average to the downside. The medium-term trend is actually curving down sharply, and the prices are well below the 200-day average. So that is arguably far worse position than the silver is and the gold. So if I were to show my preference, it would be gold, silver, then platinum. And copper ETF, what it's telling me, or better, let's actually have a look at copper. So copper itself is also, well, of course, an industrial metal, right? It's actually looking worse a little bit. And there is this 200-day average being crossed over to the downside by the 50-day trend and by the 20-day trend. So it's slightly, I would say it's technically much more significant and valid, right? Because the trends are, significantly slowing and pressing to the downside. So it's not, the copper is even worse, I'd say. Bitcoin, long story short, right? The cryptocurrencies are overall in green mostly, right? Mostly, except for Ripple, right? Minus 51%. Ripple, I have no idea why it's down. Maybe it's this, there are so many reasons why a coin might be down like that. If it was an ETF, ICC oriented stuff, maybe just pull the trigger a little bit. I don't know. Regardless, Litecoin is almost 30% up. This is pretty interesting, right? Litecoin is 30% up. Just look at this. Ooh, wee! Look at this nice candle. That's a really strong, powerful bar, ladies and gentlemen. This is a coil breakout, right? A very significant coil breakout. There you go. Declining highs and declining lows. Coil breakout. Oh man, that's a powerful move. 30% up on a one day. That's a lot. Yeah, full disclosure, I'm holding any Litecoins to the best of my memory right now. So yes. UUP, the dollar fund, big dollar fund, bullish fund, is actually right now stalling. Right now, it's a kind of like a slow 200-day slope average. The dollar itself is less bullish. It's more downside oriented. It's actually bearish on the primary trend. It's a bear market for the dollar, right? However, there is some local incline right now going on. Potentially might have to do with the prospect of 2 more rate hikes set and pre-announced by the Fed, by the FOMC. Hope it makes sense. Let me know, guys, what you're thinking. There you go. Thank you so much, Crypto One-on-One, invaluable information, King of CMTs, keep preaching, Master. Thank you so much. Living Sacrifice, 3 crosses, my Christian brother in Christ, welcome. Gentle Cats, or Gentle Cat. That's a Gentle Cat, I think. That's a really nice profile picture. There is a Crypto Grady. Let me know, guys. Again, if you have any questions, drop them in the comments. I'll do my best to answer some of these at least. throughout the show, or outside of the show, I'll ask my team for help up there. So drop the comments. And by the way, if you're watching that on YouTube, please hit the subscribe button, smash the notification bells on so that you stay notified every time we put out new video just like this one. And throw a like while you're there. Actually, it may help just the algorithms boost a little bit, right? We need more quality education. And you're in the right place if you came for quality, fact, evidence-based technical analysis, not just some fugazi thoughts and guessing and rambling, pretending that they know what they're doing. There are too many of those. So long story short, let's head into the markets more technically, more, I should say, specifically, right? This is pretty interesting, right? Listen, there was a CMT symposium earlier this year in New York, right? And I was in this very center of the beehive of CMTs, and I asked some of them, why is technical analysis called or named technical? What does it mean for the analysis to be technical, right? And we have so many different interpretations of it, so many different definitions that causes noise, that causes many different understanding kind of like approaches to it, which is something that I'd say, if I were to choose whether it's good to have it or not, I'd say it's not good to have it. It's better so that we all speak the same language and we all have the full same exact understanding of what technical analysis is. Otherwise, it's subjectivized. Otherwise, it's subjectified. Otherwise, again, it is irregular, right? It is not really clear. It is not fact oriented, right? Because we tend to focus too much on opinions rather than facts. So I'd say that, again, while talking about technical analysis, we are talking about techniques, right? We are talking about those specific ways, specific approaches to, well, in this case, to the analysis. So you have certain techniques. It is a combination of techniques, right? Such as price, volume, breadth, volatility, momentum, all right? And time analysis. So those different techniques combined give you technical analysis toolkit, right? It is a toolkit to manage risk in the first place, right? And what it means for the analysis to be technical, it means to include the techniques, and it also means that it's specific in a way that each and every single market will have its own soul, right? Would be very different. So by approaching a market technically, you're very rigorous, you're very sophisticated, you're very to the point, right? The fundamental analysis would approach it, on a kind of like a 0-1 basis, right? Black or white. It's not going to be what is the soul of the market like, what is the behavioral science behind it like, how are traders incorporating their studies, what is the actual rationality, irrationality, etc. So the fundamental analysis doesn't give you answers to what technical analysis does, and TA helps you manage your risk, right? It is not a forecasting tool. It is not supposed to give you targets for where Bitcoin is going to be in the next 5 years on the this and that day and this and that hour, right? This is crystal ball. It's fortune telling. It doesn't have anything to do with technical analysis. It's just guessing, right? Even worse if you guess it right, because if you guess it right, you start believing that there is some magical power that you may have, that I may have, right? If I flip a coin 5 times in a row, then I start believing that I'm the biggest genius coin flipper in history. Well, all that it is, it's basically chance, the deviation of chance. It's luck, right? So mistaking luck for skill is the deadliest mistake for your portfolio. So long story short, again, approaching the Dow Jones Industrials and Dow Jones Transportation on the bottom of the screen technically, specifically with the price techniques and the trend techniques, we are talking about the potential breakout, right? There is some more willingness. I'd say that there is more buzz in the upper region of the range that had been dragging, basically and going on for almost ages, right? It's going to be 10 months soon, right? This actual range may be, well, incorporating the lows more recently. However, the highs are still valid, since as early as August last year. So the highs were valid, over 300 points, were kind of like, again, intrusive, and were pushed back, were pushed down, were sold off, right? So right now we are actually breaking and showing some strength after the correction is smaller, right? The correction is smaller. We are kind of like staying there in the upper range. Now we're putting this breakaway gap. It's interesting. And it's parallel with the strength from the transportation, from the consumer-driven market, right? Transportation is critical overall to And to court, the automotive transportation is critical to the development of the industry, right? So it helps maintain the good industry. That's why you have to both watch both of those. The Dow theory would say that again, the averages must confirm each other. The Dow Jones Industrials must be confirmed by the Dow Jones Transportation, and if it does so, it actually brings you the idea on concept of health. And by the way, industrials are also in the bull market, right? How do I know that? Because the 200-day moving average is moving up, and there is not a single person in the world that would tell me that this shit is going down, right? It's very apparent. It moves up. It moves higher and higher and higher. And this is 200 days of averaged records. There is no point, there is not a single chance of discussing that in terms of chance, accident, statistical, deviation, whatever. It's an actual trend. It's an actual trend. And it's backed by transportation. It's good. S&P 500. We're showing strength and we are breaking into new highs. Look at it. We're breaking into new highs with also similar breakaway gap. This is powerful, ladies and gentlemen. We are breaking, we were actually, again, new 52-week highs made, right? The price is higher. It's been since actually many, many, many months, longer than 52 weeks, I'd say, right? So the last, it's not even in the record, right? It's, if we go ahead and take 2 years, for instance, what it's showing to me, right? So the last time the price was this high was, boom, 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 boom. Well, okay, there we go. April 2022. So it's more than 60-week high, I'd say, or something. So it's pretty spectacular. It's a big strength, and just look at it. Just look at it. I was very vocal about that on Twitter. The bull market, of course, is accelerating again. See how it kind of like exited the bear market, turned to plateau for a moment, and it started sloping up a little bit of a plateau and start sloping up even more aggressively now. Over 4,000 points for the first time in a long while. The 200 average is in an inclining mode. It is a bull market for the S&P 500, bull market for stocks, bull market for S&P 500 sectors. Okay. And those are risk sectors mostly. Right, it's more heavily weighted towards risk sectors. Up there, 450. Okay, so it's powerful breakout. Of course, we best if we close. We still have a couple more hours to close it. So if we close higher, it's a valid confirmed breakout. We got a new close breakout over finally 4,200 points up there. Earlier in the year, it was I think end of May or something like that. We actually sliced through. There might have been like some pattern included again, like whatever you name that, some smaller pattern within a pattern. Fractal nature of that is complete. And again, the breakout over the 52-week highs, 43.25, and just see it as technical beauty. It touched point. It touched and literally broke away to the upside at this exact level. Like, this is of course due to the chance. It's impossible to kind of like expect it time after time after time. There are no ideals. However, this is the most perfect example of technical analysis in practice. This one should go into the textbooks. In fact, if I write a book, and I will, then I'm going to use such an example of clean technical analysis. Beautiful polarity flip example. And the bull market is real also on the relative ratios strength side, right? The relative strength side, XLY versus XLP, the risk offensive versus risk defensive, the aggression versus defense of investors. And it's breaking and it's continuing to make new highs, 230 again, and since declining regions up there in August last year. So it's the highest it's been almost, arguably, in like 40, 50 weeks or something. Right. However, what matters is that there has been just literally, like, you timed it perfectly. 2023, the ratio flipped and it immediately kind of like rallied away above 200-day moving average. That was the first kind of like a breakout example. Then it stalled for a couple of months and then it rallied again, even higher and stronger. And just look at it. It's almost fucking vertical, right? It's almost vertical. Those are very powerful moves. It's like a very vertical move, lazy correction, and very vertical move again. So it's pretty spectacular. And this is telling me that there is continued and improving and growing preference of the ratio, of the risk offense of the riskier stocks, more than the less risky stocks. The energy is not a preferred choice anymore, right? Even there is a little bit of an incline. I'd say, of course, we still need to be careful, right? However, there is a chance we are looking at an overall major bull market reversal, right? The bull market had lasted since the COVID year. It's the third year it's rolling, and well, we are spending and continuing to spend almost over 60 calendar days below the 200 average. And the last time it happened, it was actually in the bear market, right? So we are repeating the pattern that the last time it was seen in the bear market up there, right? The bear market is where the price continues to decline and drag the averages lower. So after 3 years of a powerful bull market for the energy is not a preferred choice anymore. And again, how do I know that? It's not because I think so. It's not because I believe so. It's because I'm looking at the relative strength ratio, right? So when I compare the one price of one security, XLE ETF, for the energy sector versus SPX, what it's telling me is that the ratio continues to decline heavily and steadily ever since that's going to be October, since the bottom reversal of the stocks, right? So the stocks are rallying hard, energy is lagging. Energy is not a preferred choice anymore, right? So even if it climbs a little bit higher, maybe just consolidates, maybe again it just pushes into promotes the same range. What I'm saying is that the relative strength ratio often precedes the price. Same way we had the actual breakout up there, on the ratio side, that the timing was actually at the bottom, right? So buying the relative strength ratio breakout, observing that, you would have bought the exact bottom of the boundary of the or the symmetrical triangle coil up there, right? So we're looking at a continued downward trend and the new lows being made on a regular basis for the relative strength ratio. So just maybe, because the new lows are not coming through just yet on the price side, maybe we are yet to discover new lower prices for the XLE. Regardless of what's on the right hand side of the chart, that's something that I do not know. However, if we are looking at cheaper energy prices, if you think about that, more money stays in your pocket, more disposable income that could be pumped into financial markets. That also takes the inflationary approach from the FOMC. Again, if the inflation is down, if the energy is down, then the inflation is down. Then, if the inflation is down, and back to those kind of like a healthy, call it 2% anchor that Jay Powell says, then the economy prospers again, right? The prosperity is back on the table, and hence the bull market is enhanced. That is it. Queen, there you go. Thanks so much for your kind words. Smash the likes. Thank you so much. Thanks for the reminder. You have good memory. Now, I appreciate it. I appreciate the call to action up here, and I would highly encourage everybody and recommend so that you actually smash the likes, not because I say so, but because Queen says so. And if Queen says so, I better listen. What is your opinion about QuantCoin? I do not know what that is. Hang on. QuantCoin. What is QuantCoin? QuantCoin. QNT, is it going to be this old thing that I'm thinking it is? 2019 Quant. Jesus, I think it might have rebranded so many times that I lost account. Sorry, could you give me a ticker or something? Your mom's fat bird. Jeez, always a pleasure. Thank you, sir. Always a pleasure. Back to you. Audiobook, follow me, please, and thank you, Queen. You're too kind. Bull flag for Bitcoin, and that's actually where I'm going next. That's a good question. So let's have a look. So first of all, we are, again, for all the reasons that I mentioned earlier in the video on the stream, we are looking at a confirmed bull market that is accelerating. How do I know it's accelerating? Well, take a simple line, up there. You can make it a logarithmic chart. You can make it a whatever chart. It continues to increase its slope, to increase its velocity up there. Maybe there's a little bit of slowdown, right? There is increasing and increasing. So it's speeding up, right? The slope is increasing, but it's increasing. What it's telling you, that is acceleration, right? So the bull market, this is the bull market line. This is the bull market trend. It's accelerating. It's getting faster and stronger. The support is at 24,650. That may work as this anchor arbitrary level that the price may eventually gravitate to. It is dynamic. It changes and accelerates. So it's soon likely going to catch up faster with the higher numbers. So right now, the breakout was confirmed. Again, 28% rally from the bottom of the correction, right? From the bottom of the correction, up there was... again, bottom of the correction of 2024 800s all the way up to 31 400s, 28% rally. And again, the trend is accelerating, right? if you have a look, the average is kind of like climbing higher. So it's pretty interesting. Um, and if it does so, if the average continues to incline higher, then we're looking at a credible acceleration of the bull market, right? So the breakout was confirmed for so many levels and techniques, price, percentage, travel, time, volatility, breadth, the trend line pattern itself, the support resistance flip, etc. So all of that confirmation points are real. Right now we're looking at this local sideways kind of like a period right at this previous area of weakness, and guess what, we are not rejecting this area anymore. We are staying and making ourselves comfortable in the region. So there's some arguable strength seen when the weakness was before, and the bull market is accelerating, and the bull market means eventually higher highs and higher lows, right? This is a bull market. And well, I would argue that you know, again, take it with a grain of salt. I have no idea what's coming next. Do not, trade based on my opinions. I have no idea. I love relying on the left hand side of the chart that is speaking about facts. Right hand side is a mystery. We don't know what's going to happen, right? However, if I were to guess, then bull market is a sequence of higher highs and high lows on the primary trend. That's what we're looking at, and eventually it's a matter of time until prices burst out higher. So that may be a chance. There may be a chance we are right about to see a major burst outside of the resistance and go higher, right? If that happens, I'd say that the next magical number is $40,000, right? If the 30K lost its validity and lost its magical power, the 40K might be on the table, right? So eventually, I'd say if we break and close outside 31 400, we might be looking at well, not only kind of like burst outside of 32, targeting the actual 40K is my probable next guess, right? Plus, maybe there is some magical thinking, behind it, taking this as some sort of like a bull flag overall that lasted for 2-3 months. There might be a chance for it, right? And again, it's not about what I'm expecting to do, Bitcoin to do. It's about what people and everybody else in the market expects it to do. So if so many people sees the same pattern, maybe they're going to act upon that in the same way, similar fashion, right? So arguably, again, the bull flag is that I wouldn't call that necessarily bull flag. I'm just trying to figure it out, from the viewpoint of so many other traders. So there might be a chance if we were to kind of like be very stubborn about that. I would say that this is a pull of the flag, right? That this or maybe take it a little bit conservative. So 19, 15, no, to whatever, take it 20 all the way to 29. So 9K, kind of like a measured region. 9K out of on top of 27 is going to be 36, right? So maybe some people are going to fancy targets around target around 37 47 no 37 $36,000, just maybe. We don't know that, right? I'm just trying to again put it in some context. Regardless of what that is, this is a confirmed bull market, confirmed breakout. The prices are likely set to move higher. It's just a matter of time. However, be mindful that July is a little bit slightly positive, 10% average return. Again, averaged out of 13 years. There were months that July was negative. There were months but which July was super positive. Slower summer is typically the case, right? People take the time off. The monitors take times to spend with their family. Less trading volume, less support cushion. On the prices side beneath the price. So fewer buyers, less demand. So the higher chances that price actually doesn't have much injection of strength and it rather consolidates, moves sideways, and kind of or declines, right, because of the lack of support. So I would be careful about kind of like trading on opinions. We don't know what's going to happen. If I were to place my bets, it's moving up. However, I'm lucky to have my private trading system that I use rather than guess, right? So it's so much more important to have the private trading, the right good trading system that is tested and profitable. Give me the main chart. The main chart. Right, the correlation with the S&P 500 at the bottom of the chart, with the S&P 500 7-week correlation coefficient, it's strengthening 0.54 right now. The correlation is improving. The S&P 500 moving up, and eventually it means that it pretty consistently covers around with the Bitcoin prices. Is Bitcoin right now at 30,600? Is it accelerating this fast? It seems so. So it's accelerating and back to the same levels pre-breakout, right? So it's pretty interesting. Improving strength of the relationship of Bitcoin versus S&P 500 is positive because S&P 500 is set positively and bullish. Like I said, 83 to 84 odds that this year closes bullish. So the stronger the correlation, the better effect for Bitcoin, right? So right now, again, I'd say we are bullish for Bitcoin as well. Long-term chart is up there. 50-week average is moving up. Again, 200-day moving average is moving up. So all the trends are moving up, right? And that leaves so many altcoins behind, right? Altcoins are not really the good place to be to park your money. Guess what? When Bitcoin is actually above its earlier this year, kind of like a region, I'd say. Again, the highs. Well, take the highs of September. What was it? September, June, July, August, September last year, right? For Bitcoin and for altcoins. The Bitcoin is on the top and altcoins are on the bottom, right? This is total market capitalization less Bitcoin. Then if this is an arbitrary level like an altcoin to compare in the benchmark, then again altcoins never broke it, right? Bitcoin broke it earlier this year in March, right? So ever since it's actually moving up and the 200 baseline is accelerating. So Bitcoin is showing strength and altcoins are actually dragging and lagging behind and below the previous level. So there is this whole discrepancy. Bitcoin is up above the arbitrary level. Altcoins are down. So it's not preferred to have altcoins too much, right? It's a Bitcoin season. It's not preferred to have too many altcoins in your positions. It's better for your portfolio. Maybe not so much about mental health, but it's better for your portfolio to have to place it money where there's strength rather than where there's weakness. You want to buy the runners. You want to continue and hold on to the winners rather than hold on to the losers, arguably, right? So yeah, 200-day baseline is accelerating the average. The 50-day volatility based on ATR is kind of like above the 50-day average. So it's medium-term trend, and the average is back, and the actual ATR, the volatility is back above the average. Hence, it's strengthening the bull market. So it's good. It's healthy. It's good to have. The baseline, 200-day baseline of the Burbicator Pro that gave a signal to the buy for triggering the bull market early in January. It's actually, again, after this local slowdown coming with the correction, 2-3 months of decline, the bull flag or head and shoulders from the beginning, head, shoulder, right? Whatever that was, I wouldn't necessarily frame it as the right valid head and shoulders anymore, since it kind of like goes disrupted. This downward channel is far better frame of it. Then again, I'd say that we are moving up again on average. This is the trend, right? If you ask yourself what the trend is, what am I looking at? Is it more likely to go up or down? I'll just look at a trend because this is the dominant tendency. If the dominant tendency moves up, the dominant said, well, the price are likely to move up. So that's my private trading system, right? It is actually up there giving you a stop after the daily close that is going to be validated only after the daily close with the 29,568. So if the daily close is higher and above the level, I will move my stop and trail it up from 26,500, which is where the bull market signal kicked in. Sorry, it was actually here, right? 26,500. It was 17th of June, and it's actually public up there. You can scroll it and see on my Twitter. Yeah, so the daily trailer is up. The medium term, the 12-hour trailer is up. There is directional confluence. It's strong. The trend is upwards. There is no way to deny that we're in the bull market. So it's a very healthy bullish trend within a bull market. As simple as that. And local fluctuations like that coming from the news or whatever narratives are completely irrelevant, right? They just bring you a little bit of stagnancy and sideways orientation. However, as you see, the bullish conditions, the bull market trend is still valid. So that is about it, I'd say, ladies and gentlemen. Congratulations, congratulations to you who've survived through this show. Well done on staying so long, and I would say again, it's really great because you are giving yourself a chance to not only make up all the losses that you may have had, it's also so much better to kind of like give yourself a chance to improve your knowledge, to improve your trading, because systematic approach, systematic trading, mechanical trading, not based on your opinions, but based on signals. Signals are facts. They are validated by something that happens, that has happened in the market. Signal triggers when something happens. So by trading on signals, reliably, consistently, and profitable signals, you can get yourself a profitable result, right? And speaking of profitable signals, you may get yourself, where is it? How did I did it? There. Theburbness.com/Bybit. Those are our official partners. Theburbness.com/Bybit. You get cheaper fees. You get up to $30,000 bonus on your trading deposit, and you get profitable calls for free. Profitable, relatable. Is there such a word? Profitable, valid, tested, back tested, improved, proved, and proven in work and action to be profitable. They bring you results. They generate gains. It's proven. They're not going to save you from losses. You're going to suffer from losses. So be ready and open about that. Right? There are going to be many, many losses. However, even though you accept the losses, the profits are going to be bigger. Right? So that's something that is proven, that is tested, that is worked out in such a way so that it actually generates profit. Because we are technicians. I am a chartered market technician, and that's my responsibility. So go ahead, give yourself a chance. There's no way you lose with that deal, because worst case, you get access to profitable calls for free that saves you $1,500 a year. And on top of that, you get the profitable aspect to and access to the position size calculator, right? So it not only helps you calculate your position better, it saves you time. You don't need to pull out your calculator. You don't need to learn kind of like how to just all the equations or the formulas. It's already there and printed. It's waiting for you, and you get access to it along with your profitable free access to the calls. So give yourself a chance to improve your trading, to stand up on your feet faster, to get ahead of the curve, to get better before your friends do so, because you're early and you deserve the quality tools. And I'm a chartered market technician, accredited, certified to give you quality tools in this scene. God bless you all. See you around. Click on the link below, theburbness.com/Bybit, and enjoy all the benefits and perks. God bless you all. See you around. And again, bye-bye.